makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. The UK slips into a shallow recession in the second half of the year. We'll dive into the details in our weekly UK show. Japan also unexpectedly slides into recession, failing to the fourth largest economy below Germany and prompting caution on BOJ bets. Plus, autos in focus. Stellantis warns of a turbulent year as car makers cut prices to compete. Renault forecasts steady returns as it overhauls its lineup to counter slower EV demand. We'll be speaking to the French company's chief executive very shortly. But first thing is first, so let's look at the markets. Actually, let's look at the European markets map. Now, a lot of the focus has been what's been going on in treasuries and certainly what's been going on in the U.S. Now, if you look at stocks, they're getting a little bit of a mood higher, a bit of a lift from, of course, the S&P reclaiming that 5,000 level. It was big news earlier on in the week. You can see for the moment the FTSE gaining some 0.2%. We're seeing similar gains. The DAX and the CAC 40 between 0.6% and 0.8% higher. Now, some of the other things I'm looking at, I know some of the U.S. equities yesterday certainly retraced some of the losses spurred by data showing that U.S. core inflation for January rose more than expected. So a lot of the focus here and a lot of the situation will be what happens with yields in the U.S. The other thing we're looking at for is a couple of other days across the world. Of course, we heard also from the UK that GDP falling 0.3% in the fourth quarter, more than the 0.1% drop that economists had forecast. This complicates things a little bit for the Bank of England. Also, the IEA saying that oil demand growth is slowing, while non-OPEC plus supply is actually climbing. This is an interesting dynamic that the Gulf nations will especially be looking at. So to talk about markets, earnings, to talk about U.S. inflation, now joined by Karim Chedid, Chief Investment Strategist for BlackRock's iShares division in EMEA. Karim, as always, thanks so much for joining us. What a week, right? We had the S&P at 5,000, questions about inflation, questions about jobs data, and now the UK in a recession. What do you think will drive markets forward?
Yeah, it has been quite the week, and I think it really shows us the inflation volatility in action, which is a key view for us, that markets are still sensitive to inflation data because markets are still sensitive to this idea that central banks are responding quite sensitively to macro data. So we've seen quite a big shift in the market pricing of central bank rate cuts this year, this week alone. Now the market's only pricing 3.9 cuts for the Fed this year, only just above 3 for the BOE. There's been some big moves in the rates markets, and it's really this macro risk theme that we think matters in the investment outlook this year.
But Karim, what have we learned over the last 6 days? Is it that actually, the U.S. economy can hot up a little bit more than expected, or that driving inflation down is not going to be in a linear move?
It's the latter. It's not going to be a linear move. We always said that last leg down from 3 to 2 or 4 to 2% is not going to be a straight line. Now, we still think there's a good chance that inflation will fall to target this year. The goods disinflation, the unwind from the pandemic, is very powerful this year. We still have pressure in services. We saw that in the US CPI. But that goods disinflation is going to trump the latter. So we still think disinflation is the theme. Markets will like it, which is why we're positive on US equities over the next few months. Treasuries, it's a bit more mixed. We like to be targeted, so we're tactical with our duration view. Our favorite bucket is the 3 to 7 year. We think that gives you the best risk reward, whereas we're a bit more cautious the further out the curve you go, because risk premium has its role to play in terms of what investors are demanding.
And Karim, in terms of U.S. equities, again, there's the Magnificent Seven. If you're not a pure AI play, I think you fall a little bit behind, but how do you choose the sectors you want to be invested in?
It's actually something we're seeing a lot in the flow data. I like to analyze ETF flows because they're liquid, they're transparent, they give you a sense of the money in motion. And you see that dispersion is the name of the game when it comes to selectivity in sectors, in factors. So I look at the investor positioning over the past couple of months. December was a record for large cap US equities. January was all about tech and healthcare. So you have this targeted sector picks. So it's a bit of both. At a benchmark level, we're neutral on US equities, but when we add on the sector conviction, we become overall overweight because of tech.
I mean, you're the fourth market participant that's talked a bit about healthcare this week. Is it getting overcrowded? Do you worry about valuations?
Not really, because actually we like to call healthcare the lovable laggard, because it has been...
I love that.
Yeah,
like a teddy bear.
Exactly. So it's lagged. It's we've done, in the flow analysis that we do, we're seeing that positioning is starting to warm up in that space. So I don't think it's late in that trade. I think actually it's early.
What do you do with European government bonds right now? I mean, again, a number of forces at play.
So big difference between the Fed view and the ECB view. Markets are pricing more cuts for the ECB. We're looking at 4.5, almost 5. Again, those numbers change so quickly because of the rate volatility. But the ECB view is that they have a better chance at delivering on the market expectations of rate cuts. So once they start going, they go further in terms of magnitude. And we heard from Lagarde this morning, the comment about wages being a bigger determinant of inflation. Our analysis suggests that when wages go down in Europe, and the next signpost on that is the spring negotiations in Germany, then inflation could go down. So with that in mind, we're a bit more comfortable taking the full duration view in Europe. If not in government bonds, then at least in IG credit.
But you could see then an ECB actually cutting before anyone else. That seems also like risky. Is that risky business, cutting before the Fed?
Yeah, so I mean, historically they didn't cut before the Fed. So I think my conviction on the timing of when they start is quite low. They could wait for the Fed to go and then start going. But my conviction that they can go further once they do start going, that's where my conviction is higher.
Lagarde also saying this morning that the European Central Bank will probably keep relying on bond holdings under a future policy framework that officials are due to finalize in the coming months. I mean, this is one of the other questions. All right, the Bank of Japan, I mean, probably the most interesting but also the most awkward, monetary policy setting.
Yeah. Yeah, absolutely. And actually, when it comes to the equity view, you'll see that one of our highest conviction views, certainly in developed markets, is overweight on Japanese equities. I think BOJ, they're obviously, to your point, they're in the other direction to all the other DM central banks.
It's like being in the Atlantic on your own, trying to go on the other side.
Exactly. But something exciting has happened in Japan, which is that we have inflation. And that is driving a cultural shift in mindset for domestic investors. Domestic investors are starting to own more equities at the expense of cash because inflation has arrived. And that's the key story for me when I look at the Japanese equity view and why we're positive.
Is it positive all equities, or again, are you sector-based?
In Japan, we're more of a beta play. We like the market at a top-down level, so not as selective as in other developed stocks.
Karim, the UK. I mean, we spoke to the Bank of England governor a couple of weeks ago, and again, he was saying, look, it's really on a fine paper whether we're seeing a technical recession or not.
Yep.
Does it make a difference to your house view?
Not hugely, because if you look at the data this morning, yes, we are officially in a technical recession, but the devil is in the detail. You actually had no downward revisions for prior releases. There are positives if you look for them. But the BOE is in a tough spot. Obviously, they're priced to cut the least, only 3 cuts this year. I do think there's some caution to play with the gilts view there because of the term premium driver that we also have for US Treasuries. But this morning is not a game changer with regards to the data.
Karim, as always, thank you so much for joining us. Karim Chedid there, the Chief Investment Strategist for BlackRock's iShares division in EMEA. Now, one pre-market stock that we need to look at, Cisco announcing plans to cut thousands of jobs after a slowdown in corporate tech spending wiped out its sales growth. A restructuring plan will affect roughly 5% of the firm's workforce, which would mean about 4,000 jobs. The announcement accompanied a forecast that actually fell far short of what Wall Street was projecting. You can see Cisco down 5.5% in pre-market. Coming up, we'll be speaking to the Renault Chief Executive, Luca de Meo, after their earnings release yesterday. That conversation is up next, and this is Bloomberg. So Renault shares gaining this morning as the French car maker forecasts resilient returns for 2024. It also announced plans to overhaul its lineup in a bid to counter slow demand for electric vehicles. Well, I'm very pleased to be joined now by the Chief Executive Officer of Renault. He is Luca de Meo, who joins us from near Paris. Thank you, Mr. de Meo, for joining us. You say you have a solid margin. Again, we have seen concerns about demand for electric car vehicles actually slowing. How much do you expect that to slow down by?
Look, I think that if you look at the thing long term, EV will be a dominant technology in Europe, also because of regulation, especially CAFE regulation that people tend to, forget, where you need to achieve a very low level of average fleet consumption. So we might have some bumps on the roads as we are experiencing right now, but long term, this will fly. That's for sure. We think 2024 is probably bit tricky year, but 2025 you will see again the thing picking up because everybody will have to match the targets in 2025. So that's my view on the thing. We shouldn't doubt about the fact that EV will be a dominant technology in Europe. Maybe not the only one, okay, but it will be very, very strong, I think.
But is there anything actually that would help move the needle to try and reignite demand in the shorter term?
Look, I think it depends on I think one of the things we are doing this year is that we're introducing new cars. Normally, product offer always helps, especially because we are bringing a small car next generation EV platform. So these are cars that are much more affordable than what we've seen so far. So normally it should boost volume, at least in our case. So we think we're going to be, even in complicated times, relatively anti-cyclical from this respect. So, and then we will have to see how, different governments are subsidizing. We see, for example, Germany that pulled off the thing, but on the other side, other countries are, like Italy or France, are investing into the thing. So all in all, I believe that we will continue to grow. In fact, in a few years, we went from 0 to 16% of EV mix in Europe. No technology has done that before in the history of automotive so fast. So we shouldn't only look at the outside of the dark side of the thing.
Yeah, talking about the half side. So you abandoned the IPO of your EV unit, Ampere. Do you think that this could once again be IPO'd, or would you change your mind in the next 2 years?
Look, right now we are focusing on trying to make sure that everything we promised on the Capital Market Day in November would be delivered, right? So cost reduction, massive cost reduction, very efficient manufacturing operation, launching the products that we want to launch, 6 or 7 cars for Ampere. So I think that's the fact that we're not busy with the IPO preparation is actually giving us a little bit more time to focus on the job that has to be done. So we're pretty cool and relaxed. At the end of the day, you've seen the results that Renault has delivered. So we have all the money we need to finance, the Ampere ramp up. So we are okay. I think we made a decision because the mood is not the right one at this moment in the markets, and I think it's very wise, cool-headed decision. And let's see what happens. The most important thing is that we can bring profitable and good cars for the customers, and we will.
When are you planning? And you will. When are you planning to sell the next tranche of Nissan shares? Does that need to be sooner because you're not IPOing Ampere?
No. I think the process started we already sold 5% last year, and then we will look at the right moment, the right condition. We try to do it in a coordinated way with our friends and colleagues from Nissan. So the process, I cannot fix a date right now, but I can only confirm that, gradually we will, go down into the thing as we promised, and we did it already. So it shows that we are serious about monetizing those shares.
But we can expect something in the next couple of quarters without having a specific date. Can you give us more idea of how you think about the timeline?
Yeah, it's a kind of a sensitive information because then it gets into, things that we have to share with the auditors, et cetera, et cetera. So leave us, the freedom to decide when to do it based on the conditions. So, but the process started, we proved last year, and for sure there will be something, coming up relatively soon on that. But we have to coordinate with them also.
Your ambition is to create an Airbus of autos. Can you update us on speaking to some of your competitors to actually share this platform? Is Volkswagen on board?
Look, we have. I think I've always done small cars. Now I like small cars. Of course, I like also big cars and sports cars and all kind of them. But I think that we've been a little bit like under investing in Europe for a number of reasons on cars that are compact, that can be very useful in urban environment. So the market on the what we call technically the A segment was divided by 3 in the last 15 years. I think there's no secret. If you want to lower the impact of automotive, you need to also use a small car, especially in dense urban environments. So what we are trying to do is to bring technology, a platform, and the concept of a project where we can sell a car for below 20,000 euro, an EV car for 20,000 euro and less, and make money. And there are not many initiatives like this, so this thing becomes interesting to other competitors that might want to jump on the opportunity, and we're giving that to others. So we're discussing, left and right. I cannot confirm you any, rumor on the thing, but we are very open to share, that kind of investment, because it's very difficult to make money with small cars, and we're trying to find a way because it's good for the environment and it's good for the.
The chief executive of Stellantis also told Bloomberg that actually he's looking at pursuing possible M&A, possible consolidation with friendly automakers. Do you foresee a future where this would make sense, a merger between Renault and Stellantis?
Look, I think that we are focused on other things. We're trying to. I don't think that it is, if you want, only one recipe for success. I mean. It could be consolidation, it could be, as we are trying to do, to invest in innovation, to define and to develop a company that is more agile, more oriented to innovation, more sticking to the value chains that might grow into the future. That has been our strategy so far, and it proves to work, right? So I'm focusing on trying to move Renault into the future and make sure that Renault will more and more depend from businesses that are new businesses that have growth and structural double-digit profitability. And as I said, so far so good, and that's what we're interested in. It doesn't mean that consolidation in general could not be one way for OEMs to compete. For example, we did it in the case of Horse together with Geely on the ICE. Let's say technology, so in the combustion engine technology, because this is a mature technology, so it makes sense to put things together, to put efforts and assets together to find activity but on innovative things, but
Mr. De Meo,
realization and focus.
You're considered one of the most able managers to turn companies around. But if there's a consolidation phase and Renault is not part of it, what happens to the company in 10 years? I mean, do you need to get bigger? Do you need to merge if competitors are merging?
But look, we are making much more money selling much less car than used before. So it doesn't mean that being bigger makes you stronger. This is what I think, right? Of course, size in a very capital intensive sector like automotive is a necessary condition, but I'm not sure it's the sufficient right now in a time where volatility is dominating demands and where technology is very evolutionary. So I think that you also need that, right? And I've been hearing and practicing that kind of mantra that consolidation would be the ultimate solution for everything for 30 years. So I'm 30 years into this sector. And in fact, what you see, everybody was saying 20 years ago, 30 years ago, there would be only 3 groups, 5 groups surviving in the world. And then in the meantime, you have 150 companies that emerge in China. So when you look at the list of companies operating in the sector, it's actually much longer than it used to be. So who is right? Right, so this is. I think that's there is a different way of getting this.
Luca, thank you so much for joining us today. I hope to do it in person, actually, one time very soon. Luca de Meo, the Chief Executive Officer of Renault. Much more to come. This is Bloomberg. Well, Japan's economy unexpectedly slipped into recession after shrinking for a second quarter. For more, let's go to Van Ram. Van, will they succeed in bringing inflation up?
Morning, Francine. I think that, this inflation, this is not going to alter the BOJ's trajectory. They were projecting an economic growth of 1.8% in the next fiscal year. And I think they're projecting inflation to be 2.8% in the coming fiscal year as well. So net-net, I think this will still put them on the path towards policy normalization.
Okay, so interesting, Ven. Thank you so much. Ven Ram, too short a time, but you can follow everything that Ven and the team, of course, write on the Bloomberg terminal. He's from the MLive team. Coming up, we look at the UK's technical recession. That's next, and this is Bloomberg.